Hey everyone, it's Carlos over here, CEO of GAR Capital. Thank you for joining me on this Wednesday evening, 8 o'clock p.m., November 16th, 2016, for our midweek update. Trying to make sure to get these videos up and done every Wednesday to track where we are, where we came from, and what to expect. So let's go ahead and get started looking at our first chart, dollar yen. We've been holding this trade for a little bit now. I'm going to go ahead and mark our entry. This was a signal sent out via trade. I just want to see the date that was sent out. We sent this out on Sunday, the 13th at 107.70. Where is that marker? So let's go ahead and mark it here, 107.70. So right around here is where we got our entry in. We had a pending. I went ahead and marked it there. So let's look at a 15 chart. Let's go to 30. Bear with me, guys. Okay, so we had a bull run since our entry level on the 13th. We had our breakout here, and we went as high up as 109.71. Our target is 110, and we're looking pretty solid still, about 100 pips up from our target. We lost about 70 pips here today as the dollar pulled back a little bit from our profit, so we're just still holding. We moved our stop to break even, so we're basically with house money right now. I'm not losing any profits. At the moment, I do expect this to go higher, dollar yen, in the short term, as we still have the bull run going here on a 60-minute chart ever since the 9th that we've had that run. Ever since election day, we've had that run on a 4-hour chart. Definitely see the breakout since the Trump election, President-elect Trump. We're now at 108.64. I wouldn't really look into the Asian session as much, as we don't have any big Japanese information to push this down or push it up in the immediate term. So on a 4-hour chart, we're still looking good. If we look at a daily chart, exactly where we are, you could say we've hit short-term resistance since June, but I do believe that we still hit the 110 mark as we still continue to climb. I went ahead and sent it out on Instagram. I don't know if you saw my last post. Aussie dollar is falling a little bit after the RBA's employment change was actually 9.8% against 20.3 forecast, so less than 50% of the employment rate of what they expected. Employment rate is still better. Unemployment is still better at 5.6%, which beats consensus. But this has still brought down the Australian dollar against the dollar in the short term. We had the news here about 30 minutes ago, around 74.83. 10 pips down on a 15-minute chart, not exactly earth-shattering, but it is giving a little bit of a hint in the market as the dollar goes up with the DXY, the dollar index. Aussie dollar is going down against it across the board. We had a trade Aussie New Zealand dollar, Aussie Kiwi. We got stopped at a break even. We got in, we were up maybe about 40 pips, and then we got stopped out at break even. And good thing we did, because now it passed the break even mark, our entry, and we would have been in the red. As our Australian dollar is suffering a little bit of a hit from today's session. So I want to take a look at Aussie dollar, 74.73. The Aussie has been a very hot currency for the past couple of weeks. This is on an hourly chart. You can see here since 77.40. We're right about now 300 pips since then, as the dollar has been on fire since. If we look at a 4-hour chart, let's see if we can get a little bit of emotion here. 74.72 is the current rate. 77 at that peak high on the 6th, right before election day. And on a daily, let's see, we're still a little bit ranging on the daily to the low side. If we can break 74, we can definitely see a bearish run all the way down to 72 or 71.5. So let's go ahead and take a look at 74 as our breaking point on Aussie dollar. I'm going to go ahead and mark here 74. If we can break this 74, we'll definitely get a squeeze down to 73.50 at least, or 73. So that's one thing I am targeting. Also looking at euro dollar. Euro dollar has been taking a hit. It hit 107. It broke 107, excuse me. We're going to go and look at the hourly chart. Definitely hit the lows of the day at 106.67. rose up about 107 where it is at now, and it has been off. It's definitely hitting lower across the board here. Again, the election and the Trump bull run on the dollar. Tomorrow we have Janet Yellen again speaking, so dollar pairs will be affected. We're going to see if we get a little bit of a hint in regards to the December rate hike for the Federal Reserve. Odds makers or the market makers in regards to the stock markets are saying that maybe 100% rate chance of a rate increase. Now we're just waiting on how much basis points, either 25 basis points or 50 basis points. I'm going to go and be conservative here and say 25 basis points. Looks like it could be priced in. If we can get 50 basis points, that'll just increase the rally on the dollar across the board, and we're definitely going to have to get into that action. We're also short pound dollar, and I do like this trade as well, as we're now at 124.35. We're basically about break even at this trade. We have not moved our stop loss. We're still continuing here as we have the rise. I'm still targeting around 122 for the British pound dollar trade as the dollar gets stronger across the board. Those are the main trades I am looking at the current moment. Another trade I've always have been focusing on has been dollar Canadian dollar, and we had a little bit of a weird kind of move today. Now I'm going to explain what exactly. If we're going to go ahead and bring up a 15-minute chart. 15-minute chart, we definitely had a little bit of rise this morning at 6:45. Then around 10:30 we had the oil inventories numbers, which actually missed. We actually had a higher inventory, which pulled down oil, but which should have pulled down oil fundamentally, but it actually didn't. Canadian dollar increased, strengthened, and WTI strengthened as well. I'm going to go ahead and bring up a WTI chart after this. As you know, dollar Canadian dollar, WTI are inverse correlated, as I always speak on. We had a little bit of a bounce after that around 134.40, and we sell around 134.33. So we hit as low as the 134.10 floor, took out some stops. I could probably tell some traders probably got hit off a long dollar there. We got out of this trade on break even anyway, so we didn't lose any money, but I definitely see dollar Canadian dollar long term increasing as WTI sinks. We had a little bit of a pullback against the Canadian dollar. Canadian dollar has been strengthening since the 14th, the beginning of the week. We're up as high as 135.80, 134.32, so 150 pip move in the last 3 days for the Canadian dollar, strengthening against the dollar. So the Canadian dollar has been the strongest for the week. If you want to go ahead and compare strong versus weakness, right here, Canadian dollar versus yen, 80.85 as it broke through 81.50. The yen is starting to get back a little bit of profits across the board. So let's go ahead and look at WTI, which would be under US oil on Trading View. US oil, let's see here, we can get a 50-minute chart. You can see the move up, crude inventory, and then we had a pop, we had a pump, and then we had a dump. So we got right back to where we got started, right? We got up all the way high to 46.26 and went back down near $1 lower than where we got the pump up. And after that, we had a little bit of a bull run to 48.83, trying to flirt with 46, and we're back down to 45.41 as it settled still down for the session in the commodity trading pits all across the world on US oil, WTI. So what does that mean for us traders? US oil is still the view, there's something I want to see. The only thing is that when it comes to OPEC headlines, which would be jawboning, basically, OPEC will be talking about cutting back every so often. That's all they talk about. And trying to prop up oil prices around 45. Now, again, 45 is not the lows of the year. So in 2016, oil did take a hit. If you look at the weekly, since 2016, we had the low of 28.57, and we're now at 45.44. So you're talking about almost a $19, $18 a barrel increase. But since 2014, as high as 103, we're down to 45.44. Oil is trying to find a way to bump up to around 50. We did hit 50, I believe, last month, I believe. Last month we hit 50. We were at $50 around the ending of October. Now we're at 45.45. I do expect it drop down here on the 4-hour chart. I do see us going back down to around 42. So do expect a little more as the inventories increase, as we got reporting, as the dollar strengthens. U.S. oil, I do believe, will shrink down, and I do believe going long dollar Canadian dollar at these levels will be a good trade for the long term as a good swing. I'm expecting a good 100 pips on that trade. So that's what we're looking at on those charts. Tomorrow, as I said, we do have Janet Yellen at 10 in the morning. So please mark your calendars or mark your times. We have final CPI from Europe, and then we have ECB meetings at 7:30 in the morning. We also have some inventory numbers. We had some strong retail sales earlier this week. We missed on producer price index, which dragged down the dollar just a little bit, but it bounced back after that. Unemployment claims every week, same thing. Dudley will speak. FOMC member Dudley will speak. William Dudley, excuse me, will speak at 8:50 in the morning, about an hour and 10 minutes before Janet Yellen testified for Congress. And after that, we have some retail numbers and inflationary data for New Zealand. That's something that I will be focusing on personally, but just wanted to give you a heads up, and that's Thursday. Friday, Draghi will go ahead and speak at 3:30 in the morning Eastern Standard Time. We'll have core CPI against the Canadian dollar and Canadian economy. I'm not expecting a miss at all. I don't know exactly what data will come in, but if we do expect an oil drop, which we do, the Canadian CPI, if we get a miss, we'll get a double hit, or we can go ahead and short the Canadian dollar, maybe add a position long term and double up on those profits. We're going to keep an eye on moving our profit loss to eat that up and make sure that we're on the same page as the dollar strengthens across the board. Right now, we're getting pulled back on gains as the euro dollar is up 32 pips on the 6 hours ago. Dollar yen is now flirting around 109 as trying to gain back some losses there, some slight losses. Dollar franc, as we're also long as well, over parity. And New Zealand dollar back up a little bit. Pound yen going back a little bit. And as we talked about, Aussie dollar is still down for the session, about -8 points. So again, those are the things we are looking at. Nikkei just opened about down 0.4%. Not really much going on there. Again, just keep an eye on. We want to see the language that Janet Yellen speaks. The data is right in front of her. We're gonna see what she expects to change. What more data does she need? We've had unemployment numbers go where we need to be. PPI numbers did miss, but retail sales have been hitting. Wages have increasing. I mean, you have everything you need to get the rates to increase. So bonds yields have been rising a bit. So a little bit of a flight to more risky trades or more risky currencies as your New Zealand dollars and Australian dollars should benefit. Gold should be going down against it as well. So again, these are just an overview for the week of what we're at and currently at the moment. If you guys have any questions, feel free to email me directly, garcapital@gmail.com, or go ahead and find me on Instagram at garcapital. And that's what we're looking at right now. So again, appreciate your guys' time to spend time with me. This is a quick overview. I'm going to go ahead and send this over to our members, and this will be on the YouTube channel at garcapital. If you guys have any questions, feel free to email me or go ahead and message me on Instagram. Again, everyone have a great day. Appreciate your time, and we'll go ahead and check you out tomorrow for Yellen. And I'll be tweeting a little bit about it and also on Instagram giving you the latest news and analysis. So again, thank you very much for your time and have a great evening, everyone.